Have you ever stared at a stock chart right at 9:30 a.m. and wondered, why that price? Why did the market decide to open at that exact level? Why not higher or lower? What invisible hand sets the stage before a single trade of the day has even touched your screen? That's the mystery you're about to solve. See, every trader, whether brand new or seasoned, has faced this question at some point. You sit there, coffee in hand, and watch the opening bell. A surge of green and red candles flickers across the screen, and then the first trade goes through. That open price flashes, bold and unmissable. But it's not random. It's not magic. It's the result of thousands, sometimes millions, of buy and sell orders stacked up before the market even wakes up. And here's where most beginners get it wrong. They assume the open price is chosen by some committee, or maybe even manipulated by the exchange itself. But in reality, the open is determined by raw supply and demand. Every trader, big or small, plays a role. Pre-market orders flood in, market makers and institutions place their bets, algorithms quietly weigh risk and opportunity. By the time 9:30 a.m. hits, all of those forces collide, and the open price is born. Now, why should you care? Because the opening price is not just a number, it's a signal. It tells you who's in control, buyers or sellers. It reveals overnight sentiment. It often marks the beginning of patterns that can shape the entire day's trading session. If you learn how to read it, you can see opportunities where others see chaos. This journey we're about to take together isn't just about numbers on a screen. It's about psychology. It's about learning to stay calm when the open price jumps against you. It's about understanding that those first candles don't predict your future losses. They reveal the behavior of crowds. And when you understand the crowd, you gain power. So here's my hook for you. By the end of this series, you won't just know how the stock market determines the open price. You'll know how to use it to your advantage. You'll see why professionals love the opening bell, while amateurs fear it. You'll learn to approach each trading morning with clarity, not panic. And you'll realize that what looks like noise is actually a message. Now, before we dive in, I want to invite you to become part of this journey in a deeper way. If you find value here, hit that subscribe button right now. That way you won't miss the next episode where we peel back even more layers of trading psychology. And share your thoughts in the comments. Tell me, what's the biggest question you've always had about the opening bell? Your insights might just guide what I create next. This isn't just my channel. It's ours, a place where traders can learn without the noise, where we can slow down and think clearly. So let's get started. Let's uncover the secret of how the stock market truly decides its open price, and more importantly, how you can master it. Chapter 1. The Mystery of the Open Price. Why it captures every trader's attention. You wake up in the morning, and even before you've had your coffee, your eyes drift toward the market. The open price. That number feels like a secret, like a whisper from the market itself about what the day might hold. And yet every time you look at it, you can't help but wonder, how is it even decided? The truth is, the open price is not random. It isn't a dice roll. It isn't chosen by some mysterious hand pressing a button at 9:30 a.m. It is built, slowly, quietly, brick by brick, order by order, psychology by psychology, long before you even log in. And that's where the mystery begins. Think about the moment before the bell. You sit at your desk. Your charts are glowing. Futures are moving. Twitter is buzzing with rumors. News anchors are already smiling behind their microphones, reading headlines that will stir the herd into motion. And deep down, you feel it too, the tension, the expectation, the uncertainty. The open price matters because it's the first declaration of the day. It's the point on the chart where supply and demand finally shake hands after a long night of tug-of-war. It's the first moment when traders across the world can agree or disagree on what a stock is worth right now, and that's why your eyes never leave it. But here's the problem. As a trader, you don't just look at the open price. You interpret it. You attach meaning to it. You let it trigger emotions. If the market opens higher than yesterday's close, you feel the itch of opportunity. Is this the start of something bigger? If it opens lower, fear rises inside you. Is this the beginning of a collapse? The number is the same for everyone, but what it means to you is shaped by psychology. And yet behind that flashing number is an entire world of mechanics most traders never see. When you imagine the open, you probably picture buyers and sellers rushing in, a giant invisible crowd shoving orders onto the table at once. And that's partly true. But the deeper reality is that the open is determined by layers of forces: retail traders, institutions, market makers, news, overnight positioning, all colliding in a single point of agreement. Picture it like an auction. The stock market is always an auction, but the open price is the first bid of the day. It's like walking into a crowded room where everyone's been whispering offers all night long, and then, at 9:30, the gavel strikes and a deal is made. That deal, the first transaction, is the open. But here's where psychology enters. You don't just watch the open for information, you react to it. You create stories around it. If a stock opens above a key level, your mind tells you it's bullish. If it gaps down, your heart tells you to panic. That's why so many traders lose money in the first 30 minutes, because they aren't trading the mechanics of the open. They're trading their emotions about the open. The open price is fascinating because it's both mechanical and psychological. It's the result of thousands, sometimes millions of orders placed before the bell. Yet the meaning of it only comes alive in your mind, in your beliefs, in your fears and hopes. And once you see that, you begin to respect the open not as some magic number, but as a mirror of the crowd's psychology and your own. Take a moment and reflect on how you feel every morning at 9:30. Your pulse quickens, your breathing changes, your attention narrows. That's not random. That's your brain recognizing the open as a moment of danger and opportunity. You know moves can be violent. You know the first candle can shape the entire day. So your body reacts before you even think. That's how deep this moment is. Now imagine the institutions, the hedge funds, the market makers, the high-frequency traders. Do you think they care about the open the same way you do? Not exactly. For them, the open is logistics, it's math, it's inventory management. They have to move millions of shares without disrupting the price too much. They play a different game. And yet they know retail traders are watching the open like hawks. They know you will jump on breakouts and panic on breakdowns. And sometimes they use that knowledge against you. That's why you must learn to see the open not just as a price, but as a psychological battlefield. Every uptick, every downtick is not just numbers on a screen. It's fear and greed manifesting in real time. The open price is the spark that ignites that fire. And here's the truth. Once you understand how the open is formed, you stop being surprised by it. You stop treating it as some mysterious event. You start to anticipate it. You start to prepare your mind for it. And preparation is everything in trading. Think about it like this. If you were going to run a marathon, you wouldn't show up at the starting line without training. But that's what most traders do every morning. They show up at the open completely unprepared for the psychological intensity of that moment. They think they're trading charts, but they're actually trading their own nervous system. And that's why the open eats them alive. So as we begin this journey together, I want you to hold on to one truth. The open price is not just a number, it is a story. It's the story of every trader's expectations, every institution's positioning, every emotion bottled up overnight. It is the point where anticipation turns into reality. And your ability to read that story, not react blindly to it, will determine your survival. The open price is where the day begins, but it doesn't have to be where your account ends. Chapter 2. Pre-Market Activity, where the first clues begin.
Long before the opening bell rings, the market is already alive. You might think trading begins at 9:30 a.m., but in truth, the story of the open price starts hours earlier. And if you're not paying attention to that story, you're missing the clues that explain why the market opens where it does. Think about the pre-market session as the market stretching before the run. The lights are dim, the crowd is smaller, but the energy is there. Orders are already being placed. Prices are already moving. The auction is quietly beginning while most people are still drinking their morning coffee. Pre-market trading usually starts as early as 4 a.m. Eastern Time. Not every trader participates. In fact, the majority of retail traders don't. But institutions, hedge funds, overnight traders in Europe and Asia, they're already moving pieces on the board. And every trade they place in pre-market shapes the balance of supply and demand that will eventually define the open. You glance at your screen at 7:30 a.m. and you see something strange. A stock that closed yesterday at $100 is now trading at $103 in pre-market. How did that happen? What changed? Was it overnight earnings, a news release, a global event? Or was it simply early traders adjusting their positions, taking small profits or hedging risk? This is where psychology enters again. You don't just see the pre-market move, you interpret it. If the stock is green, you think momentum. If it's red, you think danger. But here's the truth. Pre-market is thin. It's like looking at shadows on the wall instead of the objects casting them. The volume is lower, liquidity is weaker, and sometimes a small order can make the price jump dramatically. Yet traders take those shadows and turn them into entire stories about what the day will bring. That's why you need discipline in pre-market. Not every move means something. Not every tick is a prophecy. Some are noise. Some are manipulation. Some are just liquidity tests from big players. And if you let your emotions run wild here, you'll walk into the open with a bias that can cost you. But that doesn't mean pre-market is meaningless. Far from it. In fact, it's often the most honest window into how institutions are positioning themselves for the day ahead. For example, if a stock gaps up in pre-market after strong earnings, you're not just seeing excitement, you're seeing demand. Buyers are willing to pay a higher price before the majority of traders even arrive. That tells you something about sentiment. At the same time, pre-market reveals fear. If bad news drops overnight and a stock gaps down, sellers rush to unload before the open, not wanting to get trapped in a potential collapse. That selling pressure shapes the psychology of the open. It's like the market saying, here's where we stand, and here's what we're afraid of. And then there's the futures market, the heartbeat of the pre-market world. When you check the S&P 500 futures or NASDAQ futures before the bell, you're not just looking at numbers. You're looking at the market's early vote. Futures are telling you, here's how traders are betting the day will unfold. And those futures often guide the open of individual stocks. But here's what most traders forget. Pre-market isn't just about numbers. It's about positioning. Institutions don't move billions all at once at 9:30. They test the waters early. They shift slowly so they don't reveal their hand. If you watch closely, you'll see their fingerprints in the pre-market tape, the way volume clusters at certain levels, the way prices gravitate toward specific zones. That's not coincidence. That's strategy. And your job as a trader is to read it without getting hypnotized by it. That's where psychology comes in. Pre-market can trick you into overconfidence. You see a stock soaring and think, I need to get in before the open. But what happens when liquidity returns at 9:30? That same stock might collapse, trapping anyone who chased too soon. Or you see weakness in pre-market and panic, only to watch the stock rip higher once real volume arrives. This is why you must treat pre-market like reconnaissance, not battle. You're gathering clues, not placing blind bets. You're observing sentiment, not committing your emotions to it. If you treat pre-market as the whole story, you will misinterpret the open. But if you treat it as a prologue, you'll see how the chapters fit together. There's also a deeper psychological trap here. Pre-market tempts you with the illusion of being ahead. You think, if I trade now, I'll beat the crowd, I'll have an edge. And sometimes that's true. Skilled traders can profit in pre-market, but for most, it's a dangerous game. Thin liquidity, wider spreads, and amplified emotions. The edge you think you have is often a trap pulling you closer to mistakes. Instead, your edge comes from patience, from watching how the pre-market story unfolds and using it to anticipate, not chase, the open. You see the gap forming, you note the volume, you track the futures, and then you wait. When 9:30 comes, you're not shocked by the open price. You expected it. You were ready for it. And that readiness gives you clarity while others panic. Think about it. Most traders walk into the open like tourists arriving late to a movie. They sit down in the dark, the screen is already moving, and they try to guess what's happening. But you've been watching since the previews. You know the characters, you know the setup, you understand why the scene looks the way it does. That awareness makes all the difference. So the next time you wake up and check pre-market, don't just ask, what's the price? Ask, what's the story? Who's moving here and why? Is this fear, excitement, or just noise? When you learn to separate signal from illusion, you'll carry a calm, steady mind into the open. Because the open price isn't born at 9:30. It's shaped in the shadows of the early morning. And if you learn to see those shadows clearly, you won't be surprised when the light comes on.
Chapter 3. The Role of Supply and Demand. Hidden Forces Before 9:30 a.m. At its core, the stock market is an auction. Prices rise when demand overwhelms supply, and they fall when supply crushes demand. Simple, right? But what's not simple is how those forces play out before the open, when the stage is being set, when the orders are being stacked, and when the first trade of the day is quietly being prepared. You already know pre-market shows clues, but underneath those ticks, something bigger is happening, a battle of intentions. Traders around the world are lining up their orders, submitting buy and sell requests that won't be executed until the bell rings. It's like a crowded marketplace before dawn, vendors setting up their stalls, customers deciding what they're willing to pay, everyone silently preparing for the moment business begins. Imagine this. A stock closed yesterday at $50. Overnight, good news breaks. Traders believe it's worth more. Some place buy orders at $52, $53, even $55. At the same time, sellers think perfect chance to cash out. They place sell orders at $54, $56, $57. What happens when the bell rings? The system matches the highest price buyers are willing to pay with the lowest price sellers are willing to accept. That exact match, that handshake between demand and supply, becomes the open price. But here's where it gets interesting. The open isn't just math, it's psychology in action. Buyers aren't placing those orders because of some abstract formula. They're driven by belief, by fear of missing out, by urgency. Sellers aren't setting their prices based only on spreadsheets. They're reacting to fear, to greed, to relief. Behind every order is an emotion. And when thousands of those emotions collide, the open price emerges like the average voice of a crowd. Think about it in your own trading. How many times have you woken up to big news and immediately thought, I need to get in before it's too late? That's demand. Fear of missing out crystallized into a buy order. Or maybe you've held a stock overnight, seen futures red, and panicked, I need to sell right at the open before it collapses further. That's supply, fear of loss, crystallized into a sell order. Multiply that by millions, and you see why the open can be so violent. The balance between supply and demand before the open is delicate. Sometimes demand dominates, creating a gap up.
Sometimes supply overwhelms, creating a gap down. And sometimes they balance almost perfectly, leading to a calm open. But the psychology behind those outcomes is anything but calm. Every order represents someone making a decision in the dark, before the full story of the day has even unfolded. This is why the open is so powerful. It compresses hours of emotion into one single price. And once that price is set, it becomes an anchor. Traders will look at it all day long, comparing every move to it. Was that open too high? Too low? Fair? The first trade becomes the lens through which the rest of the day is judged. But here's the danger. As a trader, you're tempted to see supply and demand as something out there, as something separate from you. You look at the chart and think, oh, the market wants this, or the sellers are strong. But remember, you are part of that supply and demand. Your decisions, your fears, your orders, whether large or small, contribute to the crowd. The psychology you feel is the psychology everyone else feels. That's why the market is such a perfect mirror. Now consider how institutions play into this. While you're placing a few hundred shares, they're placing millions. Their supply and demand dwarfs yours, but their psychology isn't so different. They too react to risk, to news, to opportunity. The difference is that their orders can't be placed impulsively. They need to be disguised, spread out, hidden within the flow. And the open is one of their best chances to do this, because the chaos of the bell gives them cover. Think of the open as a crowded stadium at kickoff. If you want to sneak into a seat without being noticed, you do it when everyone's cheering, not when it's silent. Institutions do the same. They slip their supply and demand into the frenzy, knowing most retail traders won't see the footprints. But if you train your eyes, if you learn to study how supply and demand stack up before 9:30, you begin to see hints. One of those hints is the order book. If you've ever looked at level 2 quotes, you know what I mean. Rows of buy and sell orders, stacked like dominoes on either side of the price. Before the open, that book shows you where demand is waiting and where supply is hiding. It's like peeking behind the curtain at the machinery of the market. But here's the trap. Not every order is real. Some are spoofs, placed to mislead. Institutions know you're watching, and sometimes they play games with the book to manipulate psychology. That's why you can't just look, you must interpret. You must combine the numbers with context, with news, with volume. Supply and demand aren't static. They shift with every new headline, every tick in futures, every tweet from a CEO. And your mind must stay flexible enough to adapt without being whipped around by every illusion. Here's the bottom line. The open price is the purest reflection of supply and demand at a single moment in time. It's not the true value of a stock. It's the agreed value between desperate buyers and anxious sellers crystallized into one transaction. And as a trader, your job isn't to fight that number. Your job is to understand what it represents. Because once you see the open as the child of supply and demand, you stop treating it like a mystery. You stop being shocked by gaps. You stop panicking at the bell. Instead, you begin to ask smarter questions. Why was demand so strong overnight? Who's selling into this gap? What does this imbalance reveal about the psychology of the crowd? When you shift your mindset this way, the open stops being noise. It becomes signal. It becomes information. And in trading, information interpreted calmly is everything. So remember, the open is not magic. It is not manipulation. It is not chaos. It is supply meeting demand. It is human psychology expressed in numbers. And the sooner you learn to read that story, the sooner you'll stop being a victim of it.
Conclusion. And there you have it. The mystery of the open price finally untangled. It's not magic. It's not a hidden hand. It's the raw push and pull of buyers and sellers colliding at the exact moment the market comes alive. Now you understand, the open price is set by you, me, and every participant out there. The overnight orders, the pre-market traders, the institutional giants, and the tiny retail accounts. Together, they create the equilibrium where the first trade can happen. That price is born from imbalance, expectation, and psychology. But more importantly, you now see the story it tells. The open price is the market's first breath of the day. It whispers whether fear or greed is stronger. It shows you whether news has tilted the scales overnight. It sets the emotional tone not only for the chart, but for the people behind the chart. And when you know how to read that tone, you stop reacting blindly. You start anticipating. So here's the deeper lesson. Trading is never just about numbers. It's about discipline. It's about mastering your emotions when those opening candles scream red or green. It's about staying calm when others chase or panic. And it's about remembering that one price does not decide your destiny. The way you respond to it does. If you've come this far, I want you to pause and take a moment of pride. Because most traders never ask the question you started with. How is the open price determined? They just trade blindly, guessing, hoping, reacting. But you chose to dig deeper. And that choice, that hunger for understanding, is exactly what separates long-term success from short-term noise. Now, before we wrap up, I want to turn to you directly. Did this journey make you see the market differently? Did the open price suddenly feel less like chaos and more like a mirror of human behavior? If it did, then I invite you to share your thoughts down below. Write me a comment. Tell me what clicked, what surprised you, or even what still confuses you. Because your voice matters. And if you want more deep dives into trading psychology, where we slow down, strip away the hype, and uncover the truth, make sure you hit subscribe right now. That way, you won't just stumble upon the next lesson, you'll be ready for it the moment it drops. The opening bell will always be dramatic, but drama doesn't have to be fear. It can mean opportunity if you learn to listen. And you're learning. You're already ahead of most. So the next time that clock hits 9:30 and the charts flash with that first decisive move, smile. Because now you know the story behind it. You know how the open price is born, and most of all, you know how to stay calm, steady, and sharp while others lose themselves in the noise. Thank you for being here. Thank you for giving yourself the gift of understanding. Now, let's keep going together. Subscribe, share your thoughts in the comments, and get ready for the next step in mastering trading psychology. The market is waiting. The open price is calling. And now, you're ready.